to see you. And let's just start, with crypto and where it's situated. Obviously, the price declines in Bitcoin and other coins have precipitated the shock to the system. We have a little bit of a, kind of the asset liability mismatch type stuff and essentially liquidity issues around the ecosystem. What does it mean, do you think, for the asset class to go through something like this at this point?
This is a really important moment for the industry. It's the equivalent of a large deleveraging episode where folks have discovered that some of the programming and codes don't really secure collateral properly, and decentralized finance is coming into question. So I think there's a lot of reasons this is an important moment for the industry, and it's a painful lesson for investors. I think that one of the big takeaways I'd have is that without question, when it comes to handling money, technology and code is not the only important factor. Some sort of structure on regulations and accounting and identifying collateral and counterparties is important. And I think these are the sort of the developments that need to be added to the next set of projects and blockchains.
So those are obviously, this is going to iterate, and you're going to try to figure it out on the technology side. What about for those people who really were just viewing it principally as an asset class, as something to own, whether it's because of momentum or because they were big believers in the digital gold attributes or anything like that? Can it come back from this, I guess, is the big question.
Yeah, I think it's going to come back. Bitcoin's actually held up, I think, tremendously well. As you know, Bitcoin was 2,500 just 3 years ago, and even though it's down from its highs, it's actually still around 20,000 and near some pretty important support levels. But also, the Bitcoin blockchain, for instance, has functioned pretty well. It hasn't actually had any sort of knock-on effects except for price adjusting. But Bitcoin security, there hasn't been any hacks. It's still processing a lot of transactions and moving a lot of value. And so I think it's showing that parts of the crypto system work really well, but a lot of these sort of cutting edge, innovative projects and, attempts to offer yield and leverage and allowing what customers and investors thought was excess return turned out to be phantom or borrowing from the future. And I think that's really the lesson here. But to me, the core pieces like Ethereum and Bitcoin have actually held up really well.
Now, obviously, the declines in crypto prices has come along with and is somehow interacting with the general flight from risk that we've seen in equities, in other parts of the financial markets. Where do we sit with that now, Tom? I mean, we're down, as we've been talking about, 21% in the first half of the year. It's been pretty precipitous and actually a pretty strong downtrend to this point. We've been kind of trying to navigate between the stubborn inflation on one side, the potential for economic growth to give way on the other, and investors seem like they're actually not confident that we can steer clear of any of that. What do you think's happening here for the next half of the year?
Well, that's a great question, Michael. I mean, the first half of this year has been really treacherous and tough because the markets have been dealing with inflation, which has essentially been eradicated from the U.S. for almost 2 generations. And the Fed's responded very aggressively, and it's really been essentially a prime directive. But I think as we're exiting first half, I think there is evidence that some of this inflation that's looked to be persistent really is either a bullwhip effect, of how supply chains move, and also supply chain glitches themselves and some war effects. And as those start to mitigate, the second half is going to really be a story about how quickly inflation cools. But as I look at the second half, I just think the risk reward is so much stronger. Stocks have derated. And if you look at futures pricing, the market has really changed its mind in the last few weeks about how much wood the Fed has to do, wood to chop, because the bond market itself not only tightened dramatically in the first half, but now is starting to think the Fed might be much further along in terms of reaching sort of neutral and maybe an easing cycle. And so from an investor perspective, as you know, when the Fed really begins to slow, it's not about the earnings that people are going to focus on. It's really the fact that if the Fed starts to go to neutral, multiples expand again. So I think the risk reward's very good for stocks. And I think in crypto, it's going to be the same story. I mean, basically, crypto can't rise in a period when the Fed is raising rates.
Another way of, I guess, describing that sort of that sequence of logic in terms of inflation peaking and what the Fed might do is the market is bracing for what will perhaps look like a mistake by the Fed, whether it's happened already or they're going to just kind of push it too far with another couple of rate hikes this year. And I guess, is there a risk of kind of getting too far ahead of that process, even though, as you say, stocks are a lot less expensive and certainly sentiment and positioning is much more defensive than it was a few months ago?
That's right, Michael. The Fed has a very tricky problem it has to deal with because it has to eradicate not only sort of posted inflation, but as they mentioned even this week, the Fed at Sintra, Powell said at Sintra, is that they don't want to de-anchor inflation expectations. And it's I think, primarily speaking to households. And so it's important for inflation to improve in a way. But I think one of the things that's changed in the last few weeks is that there's a lot of evidence that what we perceived as sort of sticky inflation or what's been structural really turned out to be supply chain glitch driven. And I think that in the second half of this year, if it turns out that is indeed the case and we start to see disinflation and food prices fall and inventory of a lot of goods become high and so you have discounts, that's not an inflationary environment. And we've already seen it with a lot of the industrial metals and even energy commodities.
Yeah, no, there's no doubt about that. We've gone a pretty far distance on this process. We just don't know if we're quite there yet. Tom, we'll talk to you again soon. Thanks very much.
Thanks, Michael.
All right, we're going to have